Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, Director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
My name is Rick Telberg from CPA Trendlines, and I'm here to introduce Rory Henry, the chief author and editor of the Holistic Guide to Wealth Management. And we're really proud of it. It just came out, hot off the presses, and it features the work of not just Rory, but 34 other renowned experts in the field, and you're going to meet two of them today. Rory, in case you didn't know, is director at Arrowroot Family Office and co-founder of the AFO Wealth Management Forward podcast. He's also the originator of the Advise Roar methodology. Advise Roar, ROR, for return on relationships. He's been doing this for more than 2 decades, and he's created a unique program to help accounting professionals incorporate holistic wealth management and proactive planning services into their practices. And with that, I'm going to turn it over to Rory Henry.
Thank you so much, Rick. I appreciate you publishing the book. I'm excited to have two of my esteemed friends join us today. Seth Fineberg from Accountants Forward. Seth, how are we doing?
Doing great, man. Doing great. Thank you for including me on this, and also in the book itself. It was a pleasure to write, and I really am I'm pretty passionate about the topic as well as yourself, and also our guest here today as well. Really can't wait to get into it, Rory.
Yeah, you've been a journalist, writer for over 30 years here. I know majority of that's
Hard to
been
believe.
the accounting profession. And you've seen it evolve, which we could discuss here on the panel.
Indeed.
Yeah, let me introduce our next guest, Phillip Hecker, CEO of Bento Engine, which is a platform that helps practitioners provide personalized, timely, and impactful advice. Phillip, thank you so much for joining us today.
Rory, great to see you again. Likewise, very much enjoyed the collaboration on the book. And Seth, we had the pleasure before. I look forward to partnering with you yet again today and sharing with our audience out on the lines some hopefully insightful and practical perspectives to better serve their clients and drive their organic growth.
Yes, we can talk about the what, definitely the how here, but I want to start off with the why, and that's Seth's contribution to the book here. Is why now it's important for CPAs, accounting professionals out there to embrace wealth management and holistic advice. Can you kind of talk about your chapter here and why you believe now is so important for professionals out there to start offering holistic advice?
Yeah, absolutely. Thanks, Rory. So when you and I first met, we were talking about this idea of why, you already had been talking to and starting to work with more CPAs and accountants in general, getting them more informed about the idea of wealth management, something historically CPAs haven't quite embraced. Sure, maybe at the larger level, you see some larger firms that have even acquired wealth management practices, but only in fairly recent years. And for the rest of the profession who are not, mid to large firms, for everybody else out there, if you want to stay in accounting, in this field, you realize that there are a couple of things kind of pulling you towards the idea of doing more than just the numbers. And also, just as your own business, you're looking at ways that you can evolve your own practice to, being, kind of an annuity for you and really growing by, percentage points each year. And to do that, you kind of need to start thinking outside the box. The accounting profession right now, in my view, is and has been for, I'd say, a handful of years now at a point of inflection. You have a lot of the so-called old guard aging out. The old ways, the traditional ways of doing accounting, being an accountant, are changing. And, fresh ideas are starting to come in. They're more open to a much larger world of partnership, out there, that if it's all about service for their clients.
Yeah.
Clients are, realizing that the basic, mystery behind a lot of the, tax work and the books, a lot of that is and will continue to be sort of done by technology. Not that you're not always going to, use a human, and I know we'll get into more of that aspect of things, but just the whole dynamic of being an accountant right now, I think is ripe for change and is, already evolving. So the idea of wealth management entering the space and being a part of the conversation as, services that are out there, like Phillips and others, and technology platforms available to do that level of work. I think to me, I am not getting down on accounting, quite the opposite. I am very encouraged
Bullish.
by the future and the present, but definitely the future of what accounting can be. And I think wealth management is a real strong sort of spoke in the whole client advisory services flywheel.
Yeah.
So,
I agree. We are at an inflection
and I
point. And I
didn't,
think
and I didn't give away my whole chapter, but
it's okay. I'll have to buy the book. Yeah, I agree. We are at an inflection point here, Seth, and I believe the pandemic accelerated that. Private equity's involvement in the profession has accelerated that. People are starting to be able to do, or have been doing, business virtually. And as I outline in the book, I call it a virtual family office, really integrating services, whether that's tax planning, holistic financial planning, which I believe is that base, and Philip can talk to the importance of holistic financial planning as really the foundation for any type of engagement here. And I go back to being a servant, not only to a service that you have, but a servant to the relationship. And that's where I go back to the return on that relationship. So whether you're providing this
accountants live
in-house,
and breathe on it, man.
yeah,
That's their lifeline, is that relationship with the client. How do you make it better? How do you deepen it? It's through the service and
yeah,
and meaningful service.
yeah.
And
Well,
they're already in the numbers, and
yeah.
so it just makes sense to me.
Yeah, speaking of services here, maybe I want to get Professor Phillip Hecker on the line to talk about the evolution of services within the profession. From the stockbroker way back in the 70s, 80s, now to, in the early 2000s, probably more the portfolio manager. Now we're seeing the holistic advisor really providing for the many needs of that client. So can you kind of talk about the evolution of the profession and how really technology has been at the forefront of that?
Very happy to, Rory. I come from within the wealth management industry. That's been my background and focus over the past many years. And indeed, that industry has and continues to evolve in very meaningful ways. If I were to oversimplify to tell the big picture arc of the evolution, I would point out that indeed, wealth management has evolved from merely providing access to financial markets, where in the 60s, 70s, up until the early 80s, frankly,
Yeah.
many stockbrokers, you called them, made a very good living by doing little more than merely providing access to the capital markets, because that was the only way American retail investors could participate in the incredible wealth creating engine that the markets are. With the emergence of Schwab and other business models, that changed dramatically.
Yeah.
Regulation kicked in, deregulation kicked in, enabling Americans to access and participate in the financial markets in more direct, less costly, less complex ways. Stockbrokers evolved into
Yes.
mutual fund salesmen, financial advisors, and broadened their services beyond merely providing access to actually giving advice. But it used to be fairly limited and focused on the investment product itself. That changed in the 2000s, I would argue, broadly speaking, when people realized, wait, there's much more than quote unquote just investments. Let me serve the clients across the balance sheet. lending, banking, trust and estate, other considerations, including the tax accounting field, began to really come into focus for many advisors. In the 2010s, we had a bit of a scare with the emergence of the robo-advisors. Some feared that would dislocate, displace the humans. Guess what? It didn't. If anything, it broadened the pie and increased the demand for skilled human labor. We face a massive shortage there, as we'll discuss later on. These days, I would argue the journey of the evolution of what defines a financial advisor continues. In addition to serving the client across the balance sheet, now the focus is increasingly on the client family unit at large, not just the primary account holder, but also her husband, her children, her parents, her grandchildren. So that focus away from investments only for the account holder to cross-balance sheet and now intergenerational comprehensive advice, in my mind, summarizes the state of evolution. And guess what? We ain't done yet. I am sure in 5 years' time, it will look different still.
Yeah, I agree. That's why I coined the term or popularized it, the virtual family office, because really holistic financial advice really can be encompassed by a family office. What was for the ultra affluent, the John D. Rockefellers, the JP Morgans, the Jeff Bezos, the Elon Musk. Now, through technology, Philip, we can connect these professional services to provide for the many business and personal financial affairs of a family. And then I go back into, as we can discuss, really that human first approach is understanding really what the client wants, providing that personalized and timely advice that's impactful, that can hopefully lead them to where they want to go and optimize their well-being. So let me kind of shift here. What's that, Phil?
If I may, 2 quick comments, Rory, to build on that. Number one, to your point around the virtual family office, I get that concept. I like that concept because no single advisor, no matter how skilled, can cover all the needs of the client equally well. Advisors need to partner with experts in trust and estate, in insurance, in accounting, in banking, in lending, to bring the proper solutions to bear at the right point in time. And yes, that can and should be facilitated by smart technology that is client and advisor facing, that ties it all together. Yes. If I may, I also want to circle back briefly to something that Seth said earlier on, which very much resonated. And that is the power and importance of the relationship aspect of our business, be it in the CPA world, be it in the financial advisor world. And I want to share there quickly is one of my favorite quotes from Teddy Roosevelt, who said, "Clients don't care how much you know until you know how much you care." It took me a moment to fully appreciate the power of that statement, but clients don't care how much you know until they know how much you care. What does that mean? We as an industry, I believe, stand guilty. We must be accused of oftentimes being overly technical. Alpha, beta, theta, inverted yield curve, and I'm sure there's similar scary concepts in the accounting world. We oftentimes tend to focus on how smart we are. That may not always be the best path. Clients assume that we are smart. What they really want to know is that we care. And when we lead with personal, timely, impactful advice during key junctures of a client's life, that is a great way of demonstrating that we truly care about the client.
Yes, and I know you're going to go into that later on. I know you have those age-based milestones and life events that actually give you the ways in which we can have those conversations with clients. Now, Seth, I know you talked about the importance for the accounting professional to have those conversations. Can you talk about, because I love that part of your chapter, on how we can go beyond the compliance work, beyond those tax questions, to really ask questions about who they are, what about their family and where they want to go in their life?
At the core of that, Rory, and the core of building a real relationship and working towards the return on that relationship is, really to what Phil, or I guess Teddy had said, is really sharing that you care. And showing the client that you care is going beyond just telling them, what happened, keeping them, compliant. All those things are valuable. They should not be discounted. And the world of compliance, I think is still incredibly valuable. But what you do from there matters, I would say, exponentially more than just kind of the work that you're doing. So my point is, when you're thinking about the relationship, that big A that sits in the middle of the CAS initials is advisory. And advisory, like the concept of advisor, I think kind of gets accountants, when they first hear it, they're like, oh, well, everyone's doing advisory, or I do that already, or I don't even know what it means. What it means is that you care enough to have a very meaningful and pointed conversation. And that all starts with the data that you have. The information that you have is telling you a story. It's telling you there's more here than just what happened. You can start with very simple, like if you're in someone's books, you can start going, okay, let's kind of set up a cash flow forecast for you. Let's start talking about these things. And the more knowledge that the accountant has, the greater their value, and the more that they're going to be able to show that they care. Not that accountants don't care. I don't want to get into that.
Yeah.
But what you're able to really do is, use what's available to you and their own relationships outside of what they know. This is a whole, kind of new world for the most part, the idea of wealth management, but it's a natural evolution because you're already in the financials, you're already in the numbers. You can kind of see where life events can happen. Philip, it was possibly you, maybe in our previous conversation, we were walking through the whole life cycle of when you start having these conversations as a financial advisor, as a life, advisor. And sure, some accountants might be into estate planning and things like that, but that's kind of paperwork for the most part. I mean, not to belittle it, but it's okay. Yeah, I know the forms that need to, go here, and we can set this up over here in this bank and this trust and what they can do that. It's great because all of a sudden it's this great mystery of like, I don't know how to do that. Okay. But then it's the conversations that happen at very specific pointed times. It's the same thing in a business, your business client's life. You can kind of see when it's time to have these conversations. You can even mark it off on your calendar, like, okay, time to start talking about,
Our friend Ron Baker likes to call it from womb to tomb, right? And maybe that's a good segue into this, Philip, because I know you have talked about early advice 1.0, which was a transactional. You have advice 2.0, which is goal-based, and then you have advice 3.0. Can you talk about the evolution from 1.0, 2.0, 3.0 to really provide this comprehensive or holistic advice for our clients out there?
Yeah, Rory, and I believe you're referencing some interesting research that came out from a couple of years ago from J.D. Powers, the big consumer client satisfaction, research shop. And they indeed surveyed American investors and advisors, and they categorized the advisors in terms of their value proposition and business model today into three buckets. Does the advisor provide only sort of transactional advice? Think, investments, my portfolio is better than theirs, versus is the advisor leading with a goals-based advice proposition, think financial planning, as a
buy a home, right? Education planning.
And pillar of that, type of practice. And the third model is truly comprehensive advice that does transactional for sure, that does financial planning for sure, but then also comes close, I think, Rory, to your vision of the virtual family office, really serving the clients across balance sheet and across generations on all their wealth needs broadly defined. Those are the three models. And then they surveyed, both advisors to figure out who fits into what model and clients, investors on their likes and dislikes of the models. And just to read out the data, and people can Google it, J.D. Powers, wealth management advice experience and net promoter score. The transactional advice model, 42% of advisors still fall in that business model today. Clients who experience that business model have a net promoter score of 33. So 42% of advisors, 33 net promoter score. When it comes to goals-based advice, again, think financial planning, 47% of advisors have that as the core of their value proposition, leading to a doubling of the net promoter score to 66. It really makes clients more happy if you do financial planning with and for them, as opposed to just, the transactional investment side of the equation. Leaving the most comprehensive advice model, only 11% of advisors are truly providing comprehensive advice today, coming close to your model, Rory, of the virtual family office. But when they do that, the net promoter score shoots up to a whopping 88%. So in a sad way, the most dominant model, which is still the transactional one, has the lowest client satisfaction. And those advisor practices who evolve towards the more comprehensive benefit from having demonstrably happier clients.
Yeah.
Super interesting data from JD Powers. I'm sure we can put it into the show notes for people to read more.
You need that stickiness. You need that kind of wow factor, surprise and delight, they call it. I guess stickiness is kind of more of a marketing term, but whatever it is, once you start looking at, from the accountant perspective, once you start looking at your practice really more as a business and going, well, where's my value? What's the value of me? I even just recently wrote about that just in a blog I did. It was just like, what constitutes your value? Like what is your value? What do you think your value actually is? And accountants are guiltiest, I think, of undervaluing themselves at every turn. And but now, with all we're doing here, folks who are watching this, and with Rory's book, it's just presenting you with an opportunity and showing you how actually a natural of a step it truly is, and partnering with the businesses like Phillip's, like Rory's, and
like Jackie Meyer
a
with
dozen
tax planning.
others. Yeah, exactly. We all just again, another adage, we all go further together.
Yeah.
So the partnership idea is really one that sings true in this scenario. So.
That couldn't agree more. At the end of the day, it boils down to me to relevancy. Are you as a financial advisor, are you as an accountant relevant to your client families? Ideally, not just during tax season, but ideally throughout the year. Ideally, you are the first or one of the first calls whenever a big life event, happens that upsets the apple cart in the lives of your clients. Relevancy is what it boils down at the end of the day. And sometimes that relevancy needs to be reactive. We need to react as advisors to unforeseen life events that invariably will happen. Sometimes it's necessary and okay to be reactive. Don't get me wrong. Sometimes reactive is good. Oftentimes, though, we can and should be proactive. There are many wealth management milestones that are highly predictable. For example, turning 62, the big question looms, do I start taking Social Security benefits now, or am I better off waiting until later? Pop quiz question for you, Seth. What % of Americans make suboptimal choices around the question of when to best start filing for their hard-earned Social Security benefits?
I'm going to say it's a pretty high number, Philip. I'm going probably 80+%, 85 even.
Unfortunately, you are spot on. There was some super interesting research done by professors at Boston University recently that studied, the actual filing habits of Americans, and you are spot on. 90% should file later, not at 62, but only 10% actually do so, i.e. around 80% make
unless you've got some other investments, some other life situation where it's like, you can do that, but
Many of your clients should wait until later. Rory, pop quiz question for you.
Yes.
When they file too early, what do you think they leave on the table? What is the median foregone lifetime benefits that they leave on the table by filing too early?
Well, we've done this, Philip, and let me see if I remember correctly, but I think it was around $180,000. Yeah.
$182,000 at the median. When you focus on the top quartile of income earners, that goes up to 290K. We're talking meaningful value here
Yeah.
that Americans are leaving on the table because they're not getting the right advice on the right topics at the right point in time. To tie that back to our audience, what may that mean for you as accountants? Perhaps you don't have to be the one that provides the detailed guidance on how to think about Social Security benefits. But perhaps you be the one that for your clients in their late 50s, early 70s, as they start to think about that best question, you simply ask, has your financial advisor discussed your optimal Social Security strategy with you? If not, suggest to them to reach out to their advisor to have that conversation. It's an important one. And there are many more like it that are age-based, that are highly predictable, where caring advisors can, should, and do step up in proactive ways.
Yeah. And, again, when we talk about advisors, and I love that we can use the same language, it's not just financial advisors. It's someone who has your future, the future of your business, the future of the people that work for you, and also the individuals who have you, kind of, really shepherding them, through their own sort of life changes. You don't hire a CPA lightly just because they've got those three initials in front of their name. It does lend some credibility, some force to it, some knowledge and all of this. And to be fair, there's a lot of training and a lot of testing, a lot of work that goes into getting that licensure. But outside of that, it's the relationship that you have. So if you value it, sure, doing your job is great, but showing your worth and your own value and the fact that you care enough to go, okay, look, I know this is coming up. Let's schedule some time to talk about this.
Let's have a conversation.
Like that just automatically, like those net promoter numbers that you mentioned, like that sort of, magical, number in the client's mind goes up exponentially by the simple act, that human act of showing that you care.
Yeah. And maybe I want to have you touch on, Philip, because I'm a big a believer in making the process as frictionless as possible. And your solution really embeds these type of moments into a current CRM. Can you talk about how you've streamlined this process and how you really provide practitioners out there different ways in which they can communicate these various timelines or these various moments that matter, whether it's life events or age-based milestones? Can you talk a little bit about your software there?
Rory, happy to, without making it too much
Yeah,
of a
I know.
direct, sales pitch. If people want to learn more, they can hop onto bentoengine.com. But just at a high level, you alluded to it, we plug into the leading CRMs that are broadly used out there, Salesforce, Dynamics, Redtail, Wealthbox, all those great systems. We mine the data, the client data in the system to identify upcoming advice opportunities. And when we find one, we alert the advisor via a task, a workflow in the CRM, and give them compliance pre-approved advisor materials content to execute with. So at a high level, think of Bento as a 1-2 punch, technology to surface next best action alerts, bit of a buzzword in the industry right now, combined then with the content that people need to actually execute with and deliver the advice. And for our audience here, I would also highlight for every topic, we have 38, topics, 38 moments that matter loaded in the system. We not only have multi-format client materials, but also internal use only advisor FAQs, where advisors can get smart real quick on how do QCDs, qualified charitable distributions, at age 70 and a half. How do they work again exactly? If you want to connect with the next gen of your client family and get working papers for the 14-year-old kid or grandkid, how exactly does that work in your state again? The materials will, talk you through that. So Bento is in many ways a client engagement system, allowing advisors to proactively serve their clients during moments that matter. And it has a baked-in advisor learning and development, advisor training aspect, because frankly, that's important. These wealth planning topics are complicated. Laws and regulations are changing all the time. And even the best
Same thing in
advisors
tax and accounting.
have a hard time staying on top of that. So Rory, that's where technology can come in and really help amplify the human advisor. What we like to say is we make human advisors more human, more often. Using tech to make humans more human more often is what we're all about.
And I know we're going to have the estate planning technologies come on here. I always say that estate planning really provides a family office level of care, really connecting generations. I think that's the power of this model, is really being able to provide and give financial literacy and education to the next generation. Can you talk about the next gen work that your platform kind of offers here? Because I know it's important. It's part of your mission here to provide financial literacy to more folks out there. Can you talk about ways in which that you're helping educate the next gen?
Absolutely. So there are two content programs that help advisors to connect with G2 or G3 of the client family from very early on. One is there are a few age-based milestones that Uncle Sam gives us that provide great opportunities to lead with timely topical advice. For example, I mentioned age 14. That's the legal working age in the US. Kids can legally start earning income at the tender age of 14. Not in all, but in the vast majority of states, they need working papers to do so. How you get them differs state by state. Sometimes it's via the school system, sometimes the town hall. With the legally earned income from summer jobs, from babysitting, from lawn mowing, whatever it might be, we advise our advisors to advise their clients to then open custodial IRA accounts under the kid's name so that the kids get to enjoy the power of tax-deferred compounding for decades to come. Think about it. The advisor connecting with G2 or G3 at the tender age of 14, helping them to learn and appreciate earning, saving, investing, and doing that in location-aware, tax-smart ways. I hope you concur, everybody benefits. A great introduction to the children, a great trust builder for the parents, and guess what? You open custodial IRA accounts at your own firm with the next generation. Everybody wins when you lead with timely, personal, proactive advice.
Yeah, they call that money in motion. I know there's the great wealth transfer, Philip. The latest stats, I believe, Cerulli says $124 trillion will be passing down through 2048. So there's tremendous opportunity to start providing holistic financial planning and wealth advice to the next gen.
Well said.
Yeah. All righty. So let's continue on here. I know we had on the docket the McKinsey study that just came out that says by 2034 that there will be, 100,000 less advisors out there. I know, Philip, you know the wealth space very well. I'm sure that you have ways in which we can probably improve that. But I think this is a tremendous opportunity for those in our audience that are watching here to provide more future-facing advice and fill that void of financial advisors that we'll be looking at over the next 10 years or so.
Yeah, so indeed, McKinsey projects a gap of 100,000 advisors over the next 10 years. Today, we have roughly 300,000. In 10 years' time, they predict that we need 400,000. We're 100K short. Big picture-wise, personally, I believe that analysis and share that sentiment because from my perspective too, the demand for skilled human advice will only continue to go one direction in this country, and that's up. Why? Because of the massive wealth creation in this country, the splintering of the wealth that you alluded to, and increasing complexity from a regulatory point of view. All of these drive the demand for skilled human labor. At the same time, the supply of that skilled human labor has been flat at best. Let's be very honest.
Yeah.
Despite our best collective attempts, we are flat from an advisor coin point of view, and we're facing a massive retirement wave, given that many advisors are at the tail end of their careers. So
Yeah,
I
the
do
fail
believe
fail
that
rate
gap
in the
is real.
Yeah, the fail rate in the wealth management space is horrible. It's, 5 to 7 years. What is it, 80 or 90%, Philip? We're seeing drop off. We
Yeah,
don't have the training. Yeah.
You allude to, I believe, the training programs and the intake, at the front of the funnel.
Yeah.
It's hard to break into this industry and make it as a young advisor. Big firms, the big wirehouses, have had training programs for decades by now. They've tried very, very hard with mixed success at best.
Yeah.
It's invigorating for me, however, trying to see the glass half full here, to see skilled labor coming in via different channels.
Yeah.
The RIA space, registered investment advisor, very fragmented, 16,000 firms, mostly small shops, but many of them are growing and starting to train their next generation of advisors themselves. At the same time, we see an emergence of interesting academic offerings that not only help existing advisors to upskill themselves, but oftentimes also serve as a conduit for career changes to come into the wealth management space.
Yeah.
Public service shout out here. There are wonderful programs out there at many institutions, such as Kansas State
University of Georgia. Yeah.
Utah State, Georgia Tech, Texas, and so on, that provide wonderful undergrad and graduate and PhD programs for people that want to enter the wealth management space or upskill themselves. And I welcome that development, because I believe for our industry to become more like a profession, we need that rigorous upskilling that you see in other professions. And the academic route, again, can be a wonderful way of bringing fresh blood, outside talent into our space. Last comment from my end on that end. In addition to that financial advisor shortage is a massive opportunity for the adjacent fields, including accountants, to perhaps step up and fill in the void to some degree. Eager to hear what Seth might have to say on that front.
Yeah. Seth, they are the financial first responders. They are the ones that most folks
They're right
go
there.
to when they have
They're
an issue. They have the data, they have the trust. So let's hear it.
Like I say in my chapter, and I mention it a lot to my accountant, the connections that I have, accountants that I talk to, is that you have the potential to kind of write your ticket as to what you want to do. If you like the work that you're doing and you're comfortable with it, great. But just know that there's also the potential for more. Not that you should feel the pressure of, look, the accounting profession is also similarly going through a period of contraction as well. Not as many accountants to do the job. Now, the answer to this, I think, is that kind of a mantra that I've been, saying, particularly the really tax centric folks out there, the burnout that is happening in the profession, that continues to happen, not a new thing. It's dealing with a lot of the volume of work. And because of how they're structured, they feel they need to serve X amount of clients to make Y at the end of the year. Right. And it's hard to kind of start moving away from that. But once you start doing that and start showing what I'm calling value over volume, a whole world opens up to you where you don't actually have to work with nearly as many. And it won't need as many of you to do it. Now, we haven't even touched on the whole AI discussion yet. Here's an opportunity where a technology platform, now AI, as you know, is not software. It's not just some new software trend. No, it is a technology trend that has the potential, because it needs unlike software, which kind of just goes one direction. It's built to just go if then, and eventually it's going to hit a wall, and you have to add things onto it, whatever. AI has the ability, and this is the scary part, to learn, to work with you alongside of the advisor, alongside of the accountant, alongside of the professional that will help with the work. So maybe those numbers of, well, there's only going to be this many at this time won't really be such a threat
Yeah.
because you'll have technology platforms like AI to kind of help with those who are remaining to do the work. And then, the human obviously has, the benefit of, the real value
Of being human.
to see the other human and be proactive and really showcase their value. We've seen time and time again what people are willing to pay for when they feel they're getting something out of it, when it's worth it to them. I'm sure in the financial advisory field as well as the accounting field, now and of the future, it really is going to all be about what are you bringing to the table.
Yeah, that's the
So
human.
I'm excited for it. As scary as it is, and because we're just in the earliest,
Yeah.
of days. And I remember when, there was a similar kind of shiver that happened, 15 odd years ago. It was, oh, cloud's going to start replacing this, that, and the other thing. Because what it threatened really, in at least in the accounting world, was the hourly bill model.
Yeah.
It's like, well, how can I charge for things that it only takes me moments or maybe a full day to do, whereas something would take hours or even weeks
Yeah.
to produce? And the upside to that was, well, for the first time, you got to work with clients in real time without having to go to them and bring files, or have them give you files to work on your computer and worry about what version of what software and any of that technical stuff that they had. And you didn't need as much paper. You didn't need to do that. You could be on the same screen with them and see what they did or didn't do. And now with AI, it's, but that, again, the whole potential of it was, you had folks who were afraid of it, you had folks who were embracing it, and you had folks who kind of completely poo-pooed it. So, oh, it's going to go away. Dude, I remember back in the 90s, people said, oh, the internet. Yeah, like that's going to last.
So I have two comments to build on your observations real quick.
Yes.
The first one is, I like the saying, I'm not sure who did it, but AI will not replace advisors.
Nope.
However, advisors using AI will replace those who don't.
Yep. This
I
is
like
a
that
mantra going
saying.
on in accounting too, Philip.
I like that mantra very
Yeah.
much. It's the battle cry. It's the invitation to
Sure.
constructively open up and deal with technologies such as AI, because if you don't, you won't be replaced by the technology itself, but you will be replaced by those who do. And on that
the
note,
firms that are embracing it, the firms that are using it to their advantage with their clients. Yeah.
and on that note, technology is your friend, not your foe. It can be and is the force multiplier that you need for us to compensate for the advisory gap that Rory highlighted.
Yep.
Yes, the same number of advisors can serve more clients better by using technology.
Same thing in accounting. And those who've embraced it are learning that. And some might fall somewhere in the middle. It's, everyone has their comfort zone, right? But you have to take that step. You have to be willing to really see what's available to you now, not just with technology, but with a lot of these opportunities, like potentially partnering with a Bento or an AFO or dozens of other firms that are out there to work with you, because you all grow and go further together. I know I said that before, but I can't believe it any harder than I do.
Yeah, there's so much opportunity here in the profession. That's what I love the tax and accounting professional because they are the ones that have intimate knowledge many times of those small and medium-sized business owners, the backbone of our economy. And I believe we can get more people on a holistic financial plan to really map out where they want to go, and we can be those guides for them. I reference the hero's journey in the book, and we as advisors don't need to be the heroes. We need to have the clients be the hero, and we are guiding them to really the life that they want there in the future. All right, gentlemen, this has been awesome. I want to thank you so much
Thank
for
you.
contributing to the book, providing great chapters, and coming on this panel today. If folks want to learn more about what you're doing, why don't you and let them know how to reach you?
I'll go first, bentoengine.com. We're also quite prolific on LinkedIn. My name, Phillip Hecker, bentoengine.com. And Rory, thank you for the great partnership on the book. And Seth, I always enjoy our conversations. I think we all concur,
Same, Philip.
including myself from the wealth management side, that accountants are facing an interesting time full of opportunities. And if you're listening to this pod, if you're watching this webinar, if you're buying and reading Rory's great book, you're on a great journey and have many, many wonderful opportunities ahead of you.
No doubt. For me, it's pretty easy. You can go to accountantsforward.com or find me at sethfineberg.com. My website is my business card. It comes complete with what I do and why I do it, as well as some articles of the day. You can sign up for my newsletter real easily, and I'm in a partnership with CPA Trendline. So if you are a CPA Trendline's subscriber, it's very likely that you will also receive my newsletter as well, because it does go out to some of you. But to definitely guarantee that you get it, you can sign up with me. And then I'm also pretty active on social media, LinkedIn in particular. I share a lot of insights there. I get conversations going. I love doing that. And yeah, this has really been great, Rory. Thank you so much, man.
Thank you, Seth. I appreciate it. And then next up, we have Vanguard, and we're going to talk about their multi-decade-long study on the value of an advisor and behavioral coaching with Michael DeJoseph. And we'll also have the folks over at Trust and Will talking about how to incorporate estate planning into your
Full
practice.
lineup, man.
Yeah, we do. We got a bunch of these coming up. And then obviously you get the book at CPA Trendline shop, and you can reach me on LinkedIn. I'm always there. Also, the book website is adviseroar.com. Thanks, guys.
Thank you. Great rest of the day.
All opinions expressed by Rob Santos and Rory Henry on this website, podcast, interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.